let's get you an important corporate conversation. Now, this is from Apollo Hospitals, where the company is expecting a growth of 14 to 15% over the next 12 months. This is the word from Suneeta Reddy, Managing Director of Apollo Hospitals, speaking to my colleague Latha Venkatesh on the sidelines of the IMA 51st National Management Convention. She also spoke about the company's expansion plans, foray into the insurance sector. Listen in, and after this short commercial break, we'll be back with Halftime Report.
More than scared, a sense of preparedness is always good. So bringing back the protocols that we learned during COVID-19, which is, making sure that when you hear more cases, wear the masks, keep washing your hands. People with some symptoms should get isolated and tested. These are necessary protocols. And I think even with this viral fevers going on, it would be good if people followed these protocols. And monkeypox, children are more vulnerable. So for that sake, I think we should be extra cautious.
But it doesn't look like it's going to be something of a national problem.
Right now, it doesn't look like it, but I think learning from the lessons of the past, we should be prepared. Let's never underestimate. It's better to be over-prepared than be surprised or shocked.
No, fair point. Okay, now let me strike a note of business. This is a corporate radar show. You announced foray into insurance. So can you tell us, are you planning to launch full-fledged into insurance? What's the plan?
So it's 24/7 Apollo Health Co, which will have an insurance product. They've tied up with Bupa. It's more of being able to sell Bupa products online. And this is really good because what 24/7 is really, it's a holistic view of healthcare services and the ability to consume healthcare at every level. And what this will do is to enable people to pay for the healthcare that they purchase, whether it's inpatient, a diagnostic, and hopefully pharmacy. So I would say that it's a valuable addition to the offerings that 24/7 is doing.
I think when you last reported the quarter, the average revenue per bed, per occupied bed, it slowed to a 2% growth. I mean, compared to a very good fourth quarter, it seemed slower. How does it look current quarter? How does next quarter look?
I think the most important thing here is that I wouldn't look at it as a slowdown. If you looked at our volumes grew by a very healthy 12% and revenues by 15%. So what this RPOB represents is really the fact that, that more people had access to corporate hospitals like Apollo. More people who also came for secondary care surgeries. And that's a good thing, because if you look at the average realization per patient, for 75% of our patients, it's 1.5 lakhs, which makes it very affordable and keeping margins of 23.6%. So, but going forward, you will see an improvement in RPOB coming from tariff and case mix, about a 7% improvement.
Actually, what is the plan in terms of greenfield and brownfield for this year and next? For this year and next for hospitals?
Apollo.
Yeah,
yes.
Apollo.
So in terms of greenfield and brownfield, we have a combination coming up. So in 2025-26, you will see 4 hospitals. The first will be Gurgaon, which was a brownfield. We acquired a hospital, will be ready for opening. We'll have 400 beds. You will see Pune, where we acquired a 250-bed hospital. We will open 250 beds and it will move into 400 2 years later. You will also see Kolkata, where we've acquired a hospital in Sonapur, which again 250 beds, and I think one in Hyderabad, which is in Gachibowli.
Okay.
So 300 beds. And let me say that I have to put a disclaimer there that while I've mentioned total number of beds being over 2,000, we will open 50% of the bed capacity in 25-26, and then the next half in 26-27.
Okay. So it'll be more of coming from greenfield then in the coming years?
So these are, yeah. So there are 3 greenfield projects that we've identified moving into 27, 28 that will open out. So we'll be adding a hospital every year till 2030.
That's actually very good to hear from a citizen or a consumer angle.
Yes.
But for the investor, they would think that more greenfield will mean probably a reduction in margins in the year of operation. You don't think so? You think margins
No,
can
so
be...
these are brownfield, and two things to do, that I should talk about. One is that our EBITDA and cash flow is very strong. So, the 100 crores of loss coming from new hospitals is not going to impact margins significantly. And it's happening in a calibrated manner where free cash flow growth and EBITDA is very, very strong. The second is some of these are in locations where we already have a very strong presence. So break even from year one is something that we can expect to see.
Okay, so give me a number then in terms of top line and margins for the next 12 months.
I think 14-15% growth in top line for sure. And to make sure that on a larger base this happens to 2030. That is real growth, a CAGR of 15 moving into 20. And that's what we're doing with these investments. In terms of EBITDA, I think mature is at 27%. We took on some extra costs last quarter, which made it 23.6. But I think 24-25 is a stable margin that we can expect.
That's very good to hear. That's very good to hear.